Hello everyone and welcome to today's morning report chart appraisal videos on Thursday the 2nd of February with me, Richard Perry, market analyst at Handset Markets. We've got relatively neutral outlook on the equity markets, but the dollar is under pressure. This is coming on the back of this Fed meeting yesterday. This statement didn't really do much for the hawks or the bulls, whichever way you want to look at it, and they didn't really change the statement a great deal at all. In fact, they were still relatively sort of subdued on the inflation, and that certainly put the dollar under pressure in the wake of that, and that's continued today. We're back below that 99.40 support that had been in place from December. That had been holding in the last couple of days, but broken this morning, and the dollar is certainly breaking down across a lot of these forex majors. I've noticed the Aussie breaking sharply higher against the dollar. You've got dollar yen also testing really key support as well. So really interesting moves we're seeing on these currencies as the dollar is weakening. Now this sort of continues to be which the treasury yields are marginally low today, but not a huge amount, as the sort of dollar weakness that has come in the last couple of weeks on the back of these sort of protectionist measures induced by Donald Trump have really hit sentiment for the dollar. Although the treasury yields have not dropped that much, the dollar is certainly under pressure, and that is reflected in this dollar index here. Now we've got the Bank of England monetary policy today. It's Super Thursday, so we've got the Bank of England monetary policy, you've got the minutes, and also you've got the quarterly inflation report. Now no changes expected on the monetary policy. I think that is fairly well set as being flat, and so let me just show you. Get that, and then so yeah, whoa. Let's go back. No expectation is for any sort of movement on rates or quantitative easing today. Unanimous is the expectation of the decision. But the quarterly inflation report is expected to show the Bank of England sort of increasing its expectations on growth, and also importantly inflation as well, as the sort of bank has to battle against, I suppose, Brexit really, in the fact that inflation is rising, and what does it do with interest rates on the back of that? Because obviously we've got the spectre of Brexit that is going to have an impact on the economy going forward, but at the moment it isn't really having too much of a negative impact at all. So big decisions to make there from the Bank of England, but that's at 12 o'clock this afternoon, and then we've got the jobless claims for the US at 1:30, which is expected to come in at 250,000. So again, a positive number there. So that takes me to my chart of the day, which is the US dollar CAD. Now, as I said, dollar is under pressure today, and we can see that the CAD is pulling on or breaking down below this key $1.30 support. It broke down on an intraday basis on Tuesday to 29.67, so that was the low, but rebounded yesterday, but that rebound sort of lost its way, and it now certainly seems as though this is sort of completing a big bearish breakdown. If it closes below 130 today, that would be a confirmed completion of that breakdown. You've got the momentum indicators. Look at the MACD lines, negatively configured, the RSI failing around the sort of mid 50s area, and going back towards 30. So the momentum indicators are now increasingly negatively configured. You're trading below all the moving averages, which are beginning to turn down in bearish sequence. You've got a bear cross beginning to happen, arguably a bear cross, or a dead cross, sorry, I should say, on the 55 and 89 day moving averages. So the momentum indicators and the moving averages are all negatively configured. You've got this downtrend in place on the hourly chart in the last sort of couple of weeks, and that comes in around about 30.70 area today, but that breakdown of 130 is key. You've got a resistance that comes in around sort of 130.50 area as a bit of a pivot as well, and that has been a bit of a stopping area in the last few days. So again, that would be if you got a rally above 130, you're likely to be sold into anyway. You've got these series of lower highs, you're trading below all the moving averages. Momentum indicators negatively configured. The RSI, look at that, 60 seems to be where the rallies continue to fail throughout this corrective move, indicative of a bear trend going towards 30 and below. So little rallies are a chance to sell on this dollar CAD, and it certainly looks like it's going to be on the brink of closing below 130, and if that is the case, then that's a bearish breakdown. You're sort of looking at these levels 128.18 and possibly 127.60. So I wish you good luck in your trading today, and I will speak to you later. Thank you.